Cipla, again, I think commentary will be the most important thing, because that seems to be really driving pharma companies this time round. So for commentary, the key things to watch out for would obviously be the Form 483 or the observations that they had received for their Indore facility, and the progress on that would be important. Now, in terms of the overall performance, it is expected to be a subdued performance this time, but there could be a consolidation of the Invigen acquisition in the US, which could possibly help in supporting the numbers. But in terms of the revenue growth, it is expected to be around 6.5%. But remember that the range is anywhere between a decline of 1.8% to a growth of around 13%. Now, export formulations are going to be impacted because of a high base impact. Same quarter last year, export formulations had risen around 29%. And this time round, there will be the currency headwinds in South Africa, slower supplies of the Nexium API, which they've been supplying to Teva. So all that is possibly going to impact the numbers in terms of the export formulation. And the Pulmicort, which is also another drug, the API that they've been supplying to the US, that in fact might be offset by all of the other factors. For the domestic market, any sort of pickup for the domestic market would be positive for Cipla, because remember that the domestic market has been quite sluggish for them. Remember that last quarter it was down around 0.4%. So any pickup in terms of the domestic formulations would be a positive. Margin range, again, 18 to 19 odd percent. That would be closely watched in terms of what they deliver for margins. So overall, it's not expected to be a great quarter for Cipla. No fireworks, but work in progress kind of quarter. Again, commentary, I would stress on the fact that commentary will be most important.
Commentary is going to be